everyone, this is the recorded lecture for Chapter 17 on auditor's reports. This is kind of the culmination of the audit work in terms of the communication that is done for the financial statements, for the opinion on the financial statements. So there's a handful, literally a handful of learning objectives. And we're going to work through these. Essentially, we're going to be going through the standard audit report, and then how and in what circumstances do auditors make changes to that standard report. And so, what is the audit report ultimately? It's this. Remember we talked about this. There's a three-party relationship here, right, in any assurance engagement. And so the report is essentially the communication back to the users on the subject matter. And so when we're talking about financial statements, then that subject matter, if that's the subject matter, then the report is an opinion on the fairness of the financial statements. And so ultimately what we're trying to do is gather evidence that substantiates that opinion, right, that underlies that opinion. And so we're gathering evidence. And we've talked before about how auditors cannot provide absolute assurance. They have to provide reasonable assurance, and how that is the assurance that the financial statements actually conform to GAAP. So the opinion basically will be a part of the financial statements, and it will express an opinion on those individual financial statements, right? And also the notes, the disclosures that are an integral part of the financial statements. And so that together is included in the opinion of the auditor. So we're not going to go over objective 1 because it's essentially for non-public entities, and we're going to focus on public entities just because they're more likely for you to encounter them if you go into public auditing. But even more than that, the similarities are so close, it's not really worth going over non-public and public. So we're just going to skip that altogether. So we're going to focus again on on the public entity audits. Okay, and so there's a handful of characteristics the auditor's report has to have. It'll talk about registered and independent in the title, and registered comes from the PCAOB, right? We talked about that way back in the first section, how the PCAOB oversees the auditors of publicly traded companies. And you have to be registered with the PCAOB in order to do an audit for one of those firms. And so you have to include the fact that you're a registered auditor or accountant, and independent also has to be in the title, right? Registered independent accountant or registered independent public accountant is often the case. So it is addressed to the shareholders of the board, right? That's essentially the users. Because remember, managers are that accountable party, and so who do they answer to? They answer to the board directly, and the board is essentially meant to be a representative of the shareholders. It will talk about the PCAOB in terms of executing the audit according to audit standards, which we'll see in a minute. And actually, let's just kind of work our way through here, and we'll see kind of these characteristics played out in some examples. So if we look first at the opinion paragraph, this is the first paragraph. This is kind of the summary, paragraph. And it talks about how the auditors have audited the balance sheets and income statement, comprehensive income, stockholders' equity, cash flows. Notice it is for multiple years, right? And we'll talk about comparative statements at the end and the notes. And so that's what they did. It's kind of the scope. And then the next sentence there is kind of the finding, the ultimate conclusion. So in our opinion, financial statements represent fairly in all material respects the financial position of the company. Right? And so we've got the scope here, we've got kind of the conclusion here. And so in this case, they're saying, yeah, everything, and you're going to usually see this statement presents fairly, and we've talked about materiality before, right? So within the scope of materiality, we think it presents fairly, and it's in conformity with accounting principles generally accepted in the U.S., right? This is GAAP. Okay, so you have the scope, you have the criteria, and you have the conclusion all in this first paragraph. Okay, this is the criteria that they're judged against, and then if you remember back from that one slide we had, that was the general assurance slide, the PCAOB, this second paragraph is basically saying how did they execute the engagement, right? So we execute based on the standards in the PCAOB. And also COSO when we're thinking about the internal controls. Okay? And notice here there's essentially the second opinion and around internal controls. And we'll talk about that when we get to chapter 18. But just recognize this is usually going to be in the opinion paragraph, or opinion first two paragraphs. Okay, and so then looking, what is the basis for the opinion? Well, so they're going to lay out a few things. Financial statements are responsibility of management, right? The auditor's responsibility is to express an opinion based on what they did. And so it talks about this registration with the PCAOB. They're required to be independent. And how do we conduct the audit in accordance with the standards of the PCAOB? And it talks about, kind of the general process. This is kind of the 6-step process that we've talked about before. Plan and perform the audit to get reasonable assurance, trying to focus on the risk of material misstatement. And so then designing procedures in order to get to, in order to collect the evidence that the auditors need in order to make that opinion, right? And so, at the end of the day, they're basically saying we think that our audits provide a reasonable basis for our opinion. So, first page, here's what our opinion was. This page, or these paragraphs really, you see it's all in one page. And these paragraphs are basically saying, here's how we got to our opinion. Now this next section is a relatively new section. This talks about critical audit matters. And so this in the past, so this is all new here. In the past, auditors, all they had to do was kind of what we saw before. Here's the scope, here's our opinion, here's how we formed the opinion, boom, that's it. And remember, in the beginning, right, we talked about the market for lemons, right? And now there's a distribution of quality, right? And we drew parallels between the market for used cars and the market for audit services, right? With the quality of the financial statements being what's unknown. And so in the past, all we basically got was, you're in this portion of the distribution in terms of the client. We didn't know anything else. In terms of the public, didn't know anything else. The auditors knew, but they didn't reveal anything else, right? Whereas now, what they're basically trying to do is, we really want to get a finer, a little bit more idea around where in this distribution the firm is. And that's a terrible normal distribution, but that's what it's meant to be, right? And so this critical audit matters is trying to get to that. And so basically what this is doing is pulling out areas that they think are significant, challenging, subjective, complex judgments, right? And so they're basically trying to highlight areas to say, hey, these are some significant spots in the financial statements where there's judgment, and reasonable people may have different conclusions around whether they agree with that judgment or not, right? but they're basically trying to highlight a little bit more of this distribution, essentially. Now, they're not getting this full distribution, but maybe what they're trying to do is be able to categorize, okay, are you here, are you here, are you here, right? Where in the distribution are you above this kind of passing grade, whereas before it was just did you pass or not, for the most part. And here we're trying to get a little more information, right? Basically reduce the information asymmetry between now the auditors and the users of the financial statements, right? Because we've talked about information asymmetry before between buyers and sellers, but there's also information asymmetry between the auditors who spent a lot of time in the firm and the users of the financial statements, right? If before all you got was kind of these two, and I'll scoot back here for a second, if all you got were these these sets of paragraphs, right? The opinion paragraph, you got the basis for the opinion paragraphs, and that's all that the users used to get. And basically what they're saying is, or basically this critical audit matters acknowledges the fact that the audit firm has a lot more information than that. And so this is a push to try and get more information from the audit firm now to the users, right? That's what this is an attempt. So you're going to see this more and more because this has just been very recently required. Okay. Kind of the last piece is to note here, right? We've got the firm, right? This is the accounting firm. Notice there's no partner name here, right? As long as it's not a sole proprietorship, then there's not going to be a name there. It's just going to be an individual. A company name. There's been a push in Europe and other places to try and get partners, right, to sign off on this, and they've pushed for that here in the U.S., but the U.S. so far has resisted that. But right now, all you see is the actual company. You see now how long they've served as the auditor, right? So now you can get to that tenure, and you're going to ask questions. That kind of helps resolve questions around independence, right? Oops. You've been there too long, but it also answers some questions around competence, because if it's your first year auditing the client, then as a user, I might be a little skeptical, right? How well did you really get to know them and get to know the firm, versus if it's like the 5th year, then I feel more confident. But maybe getting into the 15th year, maybe I start wondering about independence, right? So that's name. The city in which the firm is based, and the date of the report. Okay, and then how do we get to this critical audit matter? Well, when we've got field work here, right? And so, oops, that's a terrible F. Here, let's try that again. Ooh, man, my handwriting with the mouse is not very good. But during the course of field work, issues are going to come up, right? And so there's already some rules around what needs to be communicated to the audit committee. And so if it is something that does not need to be communicated to the audit committee, then it's definitely not going to go and be publicly disclosed, right? So that's the first hurdle. The second hurdle is the issue material, right? And if it doesn't meet that, again, we're not going to disclose it. But if it does meet that hurdle, then the question is, does it involve especially challenging, subjective, or complex auditor judgment, right? And if no, again, you don't need to disclose it. But if the answer is yes, then it does go into the critical audit matter section of the opinion. And right, the judgment, this is what you get paid for as an auditor, right? Without this piece around judgment, if it didn't take any judgment to do an auditing task or to complete an audit, then there wouldn't be much value in it. You wouldn't get paid very much, right? So judgment is where the auditors make their money. But this is essentially trying to highlight some of these issues that required significant judgment. right? Just to let the users know. All right, so I'll stop there and I'll start up another video.